Hello everyone and welcome to TTT Markets. Today we are going to discuss why trading gets harder after you get funded. Most traders believe that once they get funded, the hard part is over. But in reality, trading often becomes harder after you get funded, not easier. And today I want to explain exactly why. Because if you don't understand this shift, you might pass a challenge and then lose the funded account very quickly. Before funding, you are chasing a target. There is a clear goal, 8%, 10%, pass phase 1, pass phase 2. Your focus is forward. But after funding, something changes. Now it's no longer about reaching a number, it's about not losing the account. That shift creates pressure. Before funding, I need to hit the target. After funding, I must not mess this up. And that pressure changes behavior. So let me open up a chart and give you a real example. Let's say you passed during this strong trend here. This is Euro USD 4-hour chart. So let's say you passed during this phase. Clean structure, strong momentum. You see we have clean and clear pullbacks. You take 2 or 3 solid trades and you hit the target. Now let's move fast forward, shall we? Look what happens here in this period. Let's say here you have the funded account. Market becomes slower, range bound. Breakouts fail. Before funding, maybe you accept small losses and move on. After funding, something else happens. You hesitate. You second guess entries, or worse, you overtrade because you feel pressure to perform. The chart hasn't changed dramatically, but your psychology has. After funding, traders become defensive, not disciplined, defensive. They either close trades too early, avoid good setups, cut winners quickly, hesitate at entry, because now the loss feels bigger. This is not a demo anymore here. Remember, this is supposed to be a funded account. It's not a valuation. It's real capital. Even if the structure is the same, let's say that you have a structure like this. Emotionally, it feels different. And that difference affects execution. There is also another extreme. Some traders think, I passed, I proved myself. So they increase size, they take more trades, they relax rules. But let's look at this on the chart. Let's say we have a day like this one yesterday. We have a high volatility day, large candles. I am expanding this so you can see better. News-driven movement. And a trader who feels confident might double size, trade both directions, take breakout and reversal. It feels justified, but over months that behavior increases variance, and variance is what destroys funded accounts. Here is something most traders don't realize. After funding, there is no finish line. During a challenge, oh, I need 10%. After funding, there is no fixed number, and without a clear target, many traders lose structure. They either become too passive or start chasing crazy goals. Good trading requires structure. Targets create temporary structure. Remove the target and discipline must come from within, and that's harder. Look at this period. Okay, let's do this now so you can see this period right here. We have small candles, false breakouts, low follow through. This is where funded accounts get damaged exactly right here, because boredom creates action, and action in low quality conditions increase drawdown. Before funding, traders are hyper-focused. After funding, consistency fades slowly. They think, I'll just take this small trade, then another, then another. Drawdown builds quietly. So passing a challenge tests short-term discipline. Staying funded tests long-term emotional control. Different skills. In short-term trading, can you reach a number? In long-term trading, can you remain stable for 6 months? Can you reduce size during bad conditions? Can you accept slow weeks? These are very different demands. Now let's simplify something important, shall we? Now assume you take 0.5% risk per trade and you go for a 2-to-1 reward risk. And let's say you have a 45-50% win rate. Over time, this works beautifully. But if after funding you increase to 1.5% occasionally, I'm referring to your risk, and you are adding extra trades during good times, and you change rules slightly, now your distribution changes. Small deviations compound. Funded trading is less about skill and more about stability. Professional traders understand this transition. They actually become more conservative after funding, not more aggressive. They keep risk fixed, they trade fewer setups, and they accept flat periods. And usually they focus on longer-term payout cycles because they know getting funded is phase 1. Staying funded is the real business. Look at the entire year. Let's say I choose over here the weekly chart so you can see a long cycle, a long period. You have trends, you have ranges, you have high volatility and low volatility. This is what funded trading looks like. You don't trade one regime, you trade all of them. And that requires emotionally to be stable more than excitement. So why trading gets harder after you get funded? Because there is pressure from growth to protection. And you need a different kind of emotional intelligence. Passing proves potential. You passed, you can do it. But staying funded proves maturity. And maturity in trading is built through controlled risk and consistent behavior over a long period of time. Remember this, in trading, getting funded is a moment. Staying funded is a process.